Ray Dalio, founder of the top hedge fund in the entire world, said something about Bitcoin in a recent interview that really stood out to me. He said, and I quote, "Bitcoin's greatest risk is its success. No government wants an alternative currency." That kicked off a ton of sensationalist headlines, like, oh, Ray Dalio predicts Bitcoin would be outlawed or banned straight up. But is this a legitimate risk for us long-term investors? Or will a different scenario play out as Bitcoin continues to eat the world? In this video, I'll dive into some fascinating historical events like FDR's gold ban and the Russian ruble crisis, and share with you my conclusion on Ray Dalio's concern. So if that sounds interesting to you at all, then strap in, my friend, and let's dive right in. Let's rewind a bit, right? Ray Dalio, if you haven't heard of him before from his hedge fund work, you might recognize his bestseller book Principles, or his famous YouTube video How the Economic Machine Works, which has over 23 million views. He was skeptical about Bitcoin for a long time, and even wrote this Twitter thread outlining his problems with Bitcoin. But he definitely stayed open-minded though, and continued to research and evolve his position on Bitcoin. Because recently, in May of 2021, he revealed that he personally owns some Bitcoin now, and said himself that he'd rather have Bitcoin than a bond. But of course, he's not a moon boy, and he's super level-headed and always considers both sides. He wouldn't have become the world's top hedge fund investor any other way. So that's why in his interviews, he also pointed out some risks by saying, and I quote, "Every country treasures its monopoly on controlling supply and demand. They don't want other monies to be operating or competing because things can get out of control. I think that it would be very likely that you will have it, under a certain circumstances, outlawed the way that gold was outlawed." And he's talking about Bitcoin, by the way. So how big of a risk is this? Is this an existential threat, or is it unlikely to happen? To better evaluate that question, let's go back in history and look at some similar events and how they played out, because I think those can really shine some light on what's likely to happen for us. Now, there's three particular events I want to shine some light on, and each teaches us something super important. First is the India ban that Ray Dalio directly called out in his interviews. Back in March, this was announced by some Indian government official that they were considering a law that would be one of the strictest in the world, right? They would penalize mining, trading, and you can't even hold crypto there. They would give investors a few months to sell, but after that, they'd be fined if they were caught. This is even stricter than China, who makes it really difficult to trade or mine, but you can at least still hold. Now, in India's case, this would be done by a legit world economy, which would prove Dalio's point. But in an interesting turn of events, in June, the New Indian Express reported that the government's stance was shifting from a blanket ban to a more nuanced approach, and that they would debate it further in their next parliamentary session in July. It definitely seems like public pressure is working because their Indian citizens love crypto, and there's several lobbying groups pushing for more favorable regulation. In my eyes, this one is a wait and see as to how it'll all shake out. But even if we did end up with the worst case scenario, we can take a look at our very own gold ban in United States history to get some clues about how things might shake out in India as well. And that's the second historical event, right? The gold ban that happened in 1933 when FDR signed an executive order that ordered all US citizens to give up their gold in exchange for cash. And if they didn't, they'd face a penalty or fine, or even jail time. This is the exact historical event that Ray Dalio points out when he talks about how Bitcoin might get outlawed as well. But there are some important differences though between then and now. Back then was during the Great Depression, so FDR really needed more money for his government programs. But the United States was still on the gold standard, so money had to be legally backed by real gold. That's why he needed to confiscate private citizens' gold in order to issue more money. Now, this order stayed in place for quite a while, right? Through Nixon taking the US off the gold standard in 1971, and then finally President Ford legalized gold ownership once again in 1977. So yes, this was a successful ban of private gold for 34 years, which is a pretty long time. But one, there was a huge financial crisis going on. Two, the government couldn't print money at will because of the gold standard. And three, the cash that people received in return was still pretty stable since it was backed by gold, right? So they didn't have a reason to go underground to use some other type of currency or asset. Taking all of these points into account, This scenario, the gold ban, isn't too applicable to the present day cases in my opinion. And the third historical event is the Soviet Union's currency woes that we can turn to for more clues. Unlike the US dollar during the gold standard days, the Soviet ruble was a complete mess of a currency and their citizens could not rely on it. So they resorted to using US dollars instead in a more underground manner. Their government tried super hard to stop them from doing so, but that failed miserably because people naturally gravitated towards a harder currency. The conclusion that I draw from this is that governments may try to control the currency in their country and not allow any competition, but that may prove super difficult to prevent the use of harder currency, especially if their currency is worthless or a mess. I mean, just look at present-day Venezuela, right? Officially, their currency is the Bolivar, but that has gone way past the point of any return. People straight up view it as trash. So instead, they use dollars or even crypto for their wages and daily purchases. Now, those three bans were all currency or asset related, but we can look beyond those for clues, and I just got one word for you. Alcohol. Remember Prohibition in the USA? That happened in the 1920s when the government pretty much said, no more drinking, beer, or anything else, guys. But it didn't work out as intended because people still made their own moonshine or went to hidden speakeasies. Worst of all, the underground alcohol trade made millions of dollars every year, and the government got a big fat 0% of that revenue whatsoever. So in the 1930s, when the government was desperate for additional revenue, they ended up repealing prohibition and just regulated and taxed alcohol instead, because they had a strong economic incentive to do so. Now, the reason why I bring this up is because we may see something similar for our Bitcoin and crypto worlds. Remember folks, we gotta think like politicians. What do they stand to gain from a straight up ban? Not much if they really think about it. Instead, it's much better to regulate and tax, right? And taxing makes sense since crypto is a $1 trillion industry with multiple billions of dollars of volume flowing through it every day. So they could stand to make a lot of money by adding special taxes for Bitcoin and crypto. And on the regulation side, here's what they might propose. They can make exchanges implement circuit breakers that pause trading when things get too volatile. Or they could require more licensing, like the New York Bit license, for example. They could add more reporting requirements for certain types of crypto transactions, and create something like the FDIC, but for Bitcoin accounts. There's a thin line that the government will have to navigate though, because if they regulate too much, the industry may peace out, and there goes their tax revenue too. We just saw this happen with miners leaving China in droves and coming to the United States instead. So all things considered, technically Ray Dalio's right. There are some circumstances where the US government might outlaw Bitcoin, like some major emergency that affects the government's monetary power. But I can't really fathom that happening, right? It's much more likely that they'll tax and regulate. And even if the US government did a blanket ban, history shows that it has a low chance of success, especially since we're not in a surveillance state like China, and other countries in the world are openly embracing Bitcoin and making it legal tender. So a blanket ban is super unlikely. I give it maybe a 1% chance of happening. But also, if it ever happened, I'd take my Bitcoin and peace out. See y'all in Portugal, El Salvador, or Singapore. Countries that are actually super friendly to crypto, no capital gains, legal tender, all that good stuff, right? Which country do you prefer that's also crypto friendly though? Let me know down below because I know I'm missing some great choices. By the way, another billionaire who was once a huge skeptic of Bitcoin, but now fully on the bandwagon is Mark Cuban. He went as far as to bet $1 million on Bitcoin beating the S&P 500 over the next decade. You should watch my video up here explaining his bet and whether or not I think he'll win. Be sure to check that out. I promise you it's a good one. And why not subscribe as well? I'm Kevin from BFB. Hope to see you in the next one. Cheers.